back. We're in conversation with Keki Mistry, the Vice Chairman and CEO of HDFC Limited. We've seen the Reserve Bank of India come out with some broad outline of an action plan that they plan to take forward for resolution. What is your first reading? Is that sufficient to give? I know you don't hardly have a problem as far as...
I'll tell you my view. I'm giving you my view as an individual. This is not from not a HDFC view, my personal.
But as a veteran banker.
Yeah, as my personal view. My sense is that the way we are looking at NPAs today, if we had looked at NPAs the same way 10 years ago, the level of NPAs at that time would have been no worse or no better than what they are today. So it's not that anything has significantly deteriorated in the last 10 years, it's just that we are now looking at NPLs far more strictly,
because there's a sense
far
of
more
urgency.
stringently than what we were doing in the past. So
Yeah.
that's number one. Number two, I think NPAs have been caused in the system because of two reasons. One is in the earlier regime, years ago, there were delays in getting approvals. Things have improved a lot on that front significantly, but in the earlier days, we know that there were delays. Now, because of delays, there have been overruns on cash. Now, if there has been an overrun on cash, the company today is not able to service the full debt that it had taken, and there is some, it can service, let's say 70%, 80%, 90% of the debt, but that 10, 20, 30% of the debt which it cannot sustain is resulting in NPLs, because the whole loan then is in default. And the second reason why NPLs are happening in the system is because of the global slowdown. So these two reasons have caused NPLs in the system. Now, in the first instance, banks need to take a very pragmatic view. If a loan is of 100 rupees, for example, and 90 is recoverable, then you have to restructure the loan in a manner in which only 90 is collectible and 10 will be back-ended, pushed back, converted into equity, converted into preference share, and hopefully 10, 15 years later you'll get your money back. But for that, the banks have to sit together and take a decision to do that.
But why is it that they've not been doing that? I mean, they have various tools available.
My sense is there's some fear that if they take a decision which today looks in the best interest of the bank and is indeed taken in the best interest of the bank, should not be questioned later on by somebody saying that, there was a malified intention.
But in that case, how will the new, the action plan outlined by the RBI help?
I think it's just creating a wider, so it's not one individual who's taking a decision, it's a wider group of individuals who are taking a decision. But I think if there is some reassurance given to bankers and some kind of immunity provided to them that if a decision is taken in good faith and in the best interest of the bank, then that decision is should not be questioned.
But the kind of ballooning in non-performing assets we've seen over the last few years, do you think this is too little, too late from the regulator?
I think we need to understand, Ritu, that as I said, the way we are calculating NPLs today are different from the way we were looking at it earlier. Loans which are today classified as NPLs 10 years ago would not even have been classified as NPLs under similar circumstances.
Yeah.
So the ballooning of NPLs is happening because we are looking at NPLs a little differently.
But that said, given that there is more recognition and that is the first step to the solution, do you think what the regulator is trying to do now is coming a little too late in the day?
No, I don't think so. I think somewhere it has to get tackled.
Or is the Reserve Bank of India being too stringent with the existing guidelines for the banks to be able to...
Maybe that is something RBI may want to look at, to take a little more pragmatic view on some of these cases. Okay.
The other issue right now why HDFC is very much in the news is for your proposed merger with Max.
We are not merging with anyone.
HDFC Life, your subsidiary. So the earlier plan, of course, was for Max Financial to merge with Max Life and then HDFC Life to reverse merge.
Correct.
But now we understand the regulator has expressed some concerns because it's not a pure play insurance company to insurance company merger. Have you heard from the regulator?
We have not heard anything officially from the regulator in recent times. We've obviously heard your news channel, and we've heard about how the regulators have not accepted the structure. So what we would look at is, first, obviously we'll try and get a more concrete confirmation from IRDA. But in the event that IRDA is not in favor of the present structure, we'll have to relook at the structure and see whether we can do a direct merger of the life company with the Max Life. And depending on how long that process takes, we would also look at seeing whether we should do an IPO.
But typically a merger to get all the approvals in place would easily take over a year?
I have no idea. I very honestly have no idea, because if the process is simpler, if it's a straight merger down, it may not take that long. So we are open to the idea. We are examining how long, what kind of alternate structure we can have. Secondly, if there is an alternate structure, how long it will take to get the merger done. Would it take, as you said, 1 year? Could it be done in 6 months' time? I don't know. And then take a call on whether we should do an IPO, whether we should do an IPO before the merger, after the merger. So everything is open at the moment.
But an IPO seems like a more likely possibility given the time frame that we're working with. Is it then more, practical perhaps for HDFC?
So, as I said, we're examining all the options. One option is to do an IPO and then a merger. The other option is do the merger and then the IPO.
A lot of work.
But, we need to understand that, as you said, right, I think you're trying to say, when the Max deal came to us around a year ago, at that time we were very actively pursuing an IPO.
Yeah.
So a lot of preparatory work has already got done.
Yeah.
In terms of preparing the documentation that is required. Obviously, some amount of changes are required, some amount of brushing up of the data is required, but a lot of preliminary work has got done. So we are examining all these options, and soon we'll take a call on what to do.
So, based on your earlier plans, given that you'd already been working on a DRHP, would you look to appoint bankers soon then to start this process in the meantime, even as you engage with the Max Financial
If we were to take a decision that we go for a merger first, we do go for an IPO first and then a merger, if we decide that, then yes, we would look at appointing bankers once that decision is taken. But first we have to be 100% sure that the present structure is unacceptable.
Hypothetically, if that were not to be the case, in an IPO, I think HDFC Life would currently be valued at around 45,000 crores?
I would hope a little more than that.
Okay. What is the kind of dilution you would be looking at? Standard Life is your partner right now.
Well, this is very preliminary, because the law in India would require that for an IPO, for a listed company, 25% of the shares have to be listed. Out of that 25%, 10 have to be done upfront, and the remaining 15 can be done over a period of 3 years. So obviously we'll have to follow the guidelines, which means 10 have to get, the IPO would have to be of 10% of the shares.
But when this merger agreement was signed, it was valid for a period of 1 year, which is set to lapse soon?
I think it's, to the best of my knowledge, you should ask this to the insurance people. I think it's 30th June. 30th June. But that can theoretically always get reviewed. That's more a legal thing, a document which is got.
But you obviously cannot wait forever,
So that's what I'm saying. So we're evaluating all the options. One option is merger first and then IPO if the merger we believe happens quickly and a structure can be derived quickly. If that were not to happen for whatever reason, then obviously do an IPO and then look at the merger.
I see. In your Ergo, of course, you made an acquisition. For your other insurance businesses, is there any divestment on the cards? None.
Other insurance business meaning the general insurance?
General insurance. Or a listing on the cards. Are you looking to unlock value?
No, on the general insurance side, with Ergo, we have an understanding that 51% of the shares are held by HDFC, 49% are held by Ergo. At the moment, we are not contemplating any IPO.
All right. Just one last question before I leave you, sir. It is 3 years of the Modi government, and we're just trying to get a sense from all the CEOs across sectors on how they reckon the economy has changed from what it was back in 2014 to how it is now. Do you see a wide difference in terms of investor sentiment?
Absolutely. There is absolutely no question of a doubt about it. I mean, it is reflected in everything. It's reflected in your currency. It is reflected in the stock market. It is reflected in interest rates, and it's reflected in all the macro data that we talked about. Low current account deficit, low inflation, fiscal deficit under control. RBI has built up so much reserves, and it's a strong rupee. I mean, the rupee in the last 12 months has actually appreciated.
Yeah. All right. Thank you so much, sir. Thank you very much. It's been a pleasure. Thank you.